Welcome to this week's market drama. We'll begin with the S&P 500, which was up 0.5%. It is now down 3.6% for the year. Nasdaq was essentially flat, is down almost 8% for the year. EFA, which is developed international stocks, are up 10% for the year. Great reminder of why you need to be globally diversified and own some international exposure there. When it comes to data points this week, the biggest highlight by far was the Fed, right? So the Federal Reserve met. They, as widely expected, left rates steady at 4.25 to 4.5. And their dot plot does indicate that they expect to lower interest rates by 50 basis points at some point this year. So no change of direction there. Basically remains unchanged from a previous projection in December. Having said that, they did increase their expectations for inflation in 2025 and lower expectations for growth on GDP for this year. Their statement basically says, look, uncertainty around the economic outlook has increased. Not surprising considering everything that's going on with tariffs, which is essentially creating inflation pressure going up and economic growth slowing down. Retail sales also was a number that a lot of people were looking for. It's a number that actually feeds into GDP numbers. Retail sales in February rose 0.2%. The expectation was for up 0.7%. So it underperformed there. But the control group, which excludes the volatile numbers around, autos and restaurants, that number rose 1% in February, which exceeded the expectations of 0.4%. So a bit of a noisy number. Overall, the market took it as stride and seemed to focus on less headlines coming from the White House around tariffs, which is clearly one of the concerns that the market has had the last couple of weeks. What's in store for next week? We have PCE inflation, which will give us a good picture of how inflation is faring, something obviously that the Fed's going to be watching very closely, as well as market participants. That is it for this week. Stay tuned for next week.